Hello, everyone. I think let's just give it a minute or two more and then we'll begin. Okay, great. I think we'll kick off now. Hello, everyone, and welcome to our first Equity Explorer webinar. I'm Karena, as you can see, and I'll be moderating today's discussion. So ultimately, the Equity Explorer series was designed as a teach-in on some topical subjects in the equity markets today. We just want to provide some deeper insights into some of the key industries, companies, and trends shaping global investments and markets. So ultimately the goal is to equip you with the knowledge to better understand the forces that are driving markets and also uncover opportunities within them. However, please do note that this is not financial advice, nor is it a deep dive into our portfolios. So with that, I'm excited to introduce today's discussion on one of the most critical and transformative industries of our time, which would be semiconductors. So we'll explore the forces shaping the semiconductor industry and the companies that are driving innovation here, and the risks and opportunities that lie ahead in this industry. So as we go through the presentation, please feel free to send through any questions and we'll try to answer as many as possible at the end. And with that, I'd love to introduce Ashin. He's one of our analysts at Fairtree, and he will take you through today's deep dive on the semiconductor industry and the underlying companies. Ash, over to you.
Thank you, Karena, for the introduction, and thanks to all those who've joined the call this morning. The structure of presentation today will start off with some of the basics of what a semiconductor is, to try and understand the complexities in the industry and why some of these companies are so important and impressive. And then I've got a section on each of the three companies which we'll be discussing today. So NVIDIA, Taiwan Semiconductors, and ASML. Firstly, there are three broad categories of semiconductors. First, we've got analog, which represents about 15% of sales in the industry, memory, which represents 30%, and logic, which represents 45% of industry sales. So each of these different subsegments within semiconductors have different characteristics. So if we start with analog, that's generally more legacy technology. There's a lot more price deflation in this industry. This industry can be a little bit more cyclical. And as you can see with the images which I've included, these semiconductors go into applications all the way from headphones, for example, to industrial applications, to vehicles, consumer electronics, military equipment, and communication equipment. Then we've got memory, which is also typically more legacy in terms of the equipment used. And what's probably sort of most well known is a USB flash drive, for example. That's a form of memory, which is storage memory. And then we've also got a form of memory called DRAM, or random access memory, which is the computing or the memory required on computers to store information as you process your information. Then logic, which is more advanced technology typically. You'd be more familiar with your iPhones or your laptops or data centers, for example, which use semiconductors which are a lot more advanced. a lot more expensive to produce and to procure. And this industry is obviously very big and growing, but the important part to note is that there's some cross-consumption across all of these categories, if you consider the different devices shown. So, for example, a laptop would also have analog semiconductors and would also have memory semiconductors. So what I'd like to try and show you is, what is a semiconductor at its foundational level. So the way I think of a semiconductor is effectively being the brain of a device, which sends signals to prompt a particular action. Once you, as the user, has prompted an action in your laptop, under the hood, the semiconductors would send signals to prompt the action. So if you start off on the image on the left, that's the sort of foundational block of a semiconductor. Semiconductors are effectively billions, in the case of leading edge logic semiconductors, of transistors, which transistors are effectively switches, where 1 represents power being on and 0 represents power being off. And this allows the electrical flow across the semiconductor. Within that, the graph or the image in the middle shows the complexity of a semiconductor, where you've got electrical circuitry built into various layers of the semiconductor. So as you can imagine, there's a lot going on under the hood of the semiconductor from what you can see visually if you had to break down one of these consumer devices. And then the image on the right is just to give you an indication of what a semiconductor looks like on a microscopic level. So this is an Intel chip, which goes into computers, and it shows the complexity of the semiconductors with billions of these little switches, as I've described, contained in one of these semiconductors. If we look at the industry, so these are industry sales. So what you can see is, firstly, there is some inherent cyclicality. But what's also important is there's accelerating growth. So if you look at the sort of annualized growth from 1999 to 2024, growth has been 5% over that period, but growth has stepped up to 7% from 2015 to 2024, and then to 9% from 2019 to 2024. And that's because of the broader consumption and application of semiconductors in a broad range of devices, not just AI devices, which we're familiar with, but also things like automotive or vehicles having a lot more semiconductor content, because you've got these impressive entertainment systems, you've got these advanced driver assistance features in your vehicles. So there's a much broader application of semiconductors. What you will notice there, I've shown the growth rates on the line. So you can see the orange line is the annual growth rate of the total semiconductor industry. The black line shows analog growth, and the green line shows memory growth. And what you can see with memory, for example, is there's a lot more aggressive cycles within memory. So I think the important point here is that within semiconductors, there are a lot of subsectors and different cycles playing out at different times. So it's quite important to try and understand the underlying drivers and understand where each of these subsectors are in terms of their cycle, and when there's growth prospects and downside prospects. To try and put in context why semiconductors are so important, there's a few important things to note. So firstly, there's potential for very explosive growth in the future. So McKinsey, as well as a number of semiconductor companies, quote a number of $1 trillion in revenue by 2030. So that's very impressive growth from the current base. And within that, consumption and demand for AI semiconductors to grow at 20% per annum over that same period. Then, of course, we know that there's AI and cloud computing, which is driving a lot of demand. So OpenAI, for example, says that there would be a 10x increase in computing consumption demand. Then we've got, as I've mentioned earlier, nice demand coming from the automotive sector. So, for example, electric vehicles consume approximately 3 times the amount of semiconductor content per vehicle versus a traditional combustion engine vehicle. Then on top of that, we've got Internet of Things, which talks to a lot more connected devices. And we all know that, for example, consumer devices consumer electronic devices are becoming increasingly more connected and tech savvy. And then the geopolitical forces are important to note. So, for example, we all know of the US CHIPS Act, which provides $52 billion of funding, primarily for onshoring of manufacturing in the US. And that's quite important because currently approximately 90% of advanced semiconductor capacity sits in Taiwan. And then we've just got the continued drivers of smaller, faster chips, which are required for the latest consumer devices and AI, for example. But looking beyond that as well, there's some very exciting trends in the market and new growth drivers coming from things like quantum computing, which is still relatively early days, but it'll help to drive growth going forward. Edge AI just talks to the importance of having data centers and connectivity close to your devices. So, for example, in an autonomous vehicle, you'd need the vehicle to communicate very efficiently and quickly with the data centers, which are processing data to make sure that autonomy is safe. And then we've got your general autonomy in not just vehicles, but in machinery, for example. So there's some very impressive growth there. And then the graph I show on the right is just an example of this. So these are capital expenditures by some of the big US internet names. And you can see the tremendous growth in the last few years as these companies are spending a lot of money to try and secure AI systems and to try to remain relevant and growing as AI starts to take off. If we then look at the semiconductor value chain, this is just a part of the value chain. I just want to try and put in context some of the companies that I'll be talking about today. So if you start with the semiconductor capital equipment, of which ASML is one of the companies within that industry, that industry provides equipment for the manufacturing of semiconductors. So the likes of a Taiwan Semiconductor would buy equipment from ASML to produce their chips. So this industry is a lot more niche, a concentrated industry, with each of the players typically specializing in one part of the process chain for semiconductors. It's a relatively high quality segment, strong free cash flow generation, shareholder returns, and just generally quite attractive. But I'll go into more detail on that. Then if I move to fabless, for example, so fabless refers to an asset-light business. So one which does not manufacture itself. So NVIDIA and Qualcomm are two topical examples of this. So these are companies which would design chips, design very complex chips with a lot of IP, and would then outsource the manufacturing to a Taiwan Semiconductor who would manufacture these chips. As you can imagine, these companies produce a lot more free cash flow generally because they're a lot less capital intensive. Many of these companies have very attractive return profiles. And then, in addition to that, I've got Taiwan Semiconductors as a manufacturing company or foundry. So foundry is just jargon for a company which manufactures chips, specialized outsourcer. So as you can imagine, given the intense capital intensity or capital requirements to procure all of this equipment, these companies are typically more asset intensive. Free cash flow generation is a bit weaker. But within that, TSMC has got very strong market share and strong drivers, which means that they are able to grow faster than the market. And I'll go into more detail there. If we look at the semiconductor equipment industry in particular, as I've mentioned, ASML falls into this subsegment. It's quite an interesting and attractive part of the market. So equipment spending represents approximately 15% of semiconductor sales, but this industry is growing quite nicely. So I've got the growth rates there. So you can see, similarly to the total semiconductor industry, there's accelerating growth and faster growth than you've seen with the total semiconductor industry. Also quite importantly, you can see the capital intensity has grown quite nicely. So sort of historically until 2019, 2020, approximately equipment represented approximately 12% of sales, of semiconductor sales, and this intensity has stepped up to approximately 17%. And the reason being that, firstly, or customers are acquiring more advanced equipment, which comes at a higher price, to build out capacity for AI applications. But in addition to that, we've got a lot of new capital expenditure going on where, for example, the US is trying to reshore some capacity and other countries are also trying to reshore capacity. Okay, so NVIDIA, I think, before we go into the company itself, I think it's quite important to try and step back and understand what makes NVIDIA quite unique and quite special. And what makes them quite special is they've produced, or the first to commercially invent and produce something called a graphics processing unit, or a GPU. So what a GPU is, it differs quite significantly from the traditional CPU. So historically and traditionally, we had predominantly CPUs, or central processing units, in devices, in PCs, and in data centers. And these chips are a little bit less advanced in the sense that they aren't able to produce parallel computing. So I think the way that I think about it, in a nice anecdote, is if you think of a construction site, a CPU would be one worker on that construction site at a time, doing work very precisely, whereas the GPU would be hundreds of workers on the same construction site, working in parallel and slightly less accuracy. And this is quite important in AI, where we've got a lot of data being processed constantly, and has really helped NVIDIA to benefit from the AI cycle, as the advent of large language models, for example, have taken off quite nicely. The image on the right is just an example of also what makes NVIDIA quite unique, is not just producing the single chip, but producing these massive servers, which include the GPU, the CPU, networking equipment, and they've also got a very important software layer called CUDA, which I'll talk about in a bit. But these servers are very impressive, very complex, and very large. That's Jensen for scale. When I think looking at NVIDIA, it's also quite important to try and understand a bit of the history and what has made this company quite successful. So firstly, it's a founder-led company. So both Jensen and Chris are still heavily involved in the company. Chris is very involved on the technology, so he's not very sort of media-facing or front-facing. But then in 1999, NVIDIA launched something called the GeForce 256, which was the world's first GPU for 3D graphics. And this revolutionized gaming as we know it, and revolutionized television as we know it as well, to a large extent. Then in 2006, they invented a software called CUDA. I think this is not talked about very much, but it's an important part of what makes NVIDIA unique, is that they've developed a software for programmers to work with NVIDIA chips. So CUDA only works with NVIDIA chips and allows you to build very complex programs and AI applications. And this has been very important because people have grown up using CUDA. So in the same way that most of us would probably be very familiar with Microsoft Office, having used it for a long time, many developers and programmers are very accustomed to CUDA, speak very highly of the efficiency and the usability of CUDA, which has allowed them to grow very nicely as the incumbent. Then in 2016 and onwards, NVIDIA benefited from more data processing, AI applications coming to the market, your big cloud internet players, for example, having to process a lot more data. And of course, in more recently, with the advent of some large language models like ChatGPT, NVIDIA has been a key enabler of that. If we try and break down what's driven NVIDIA's growth more recently, the graph on the left shows revenue growth per segment which NVIDIA reports. So you can see that the data center segment has grown significantly. and that has been the key driver for the tremendous growth we've seen in this company. But also importantly to note is if you consider the graph on the right, the gaming segment was almost 60% of their business for quite some time. So NVIDIA was traditionally considered more of a gaming-centric company. The gaming industry is a bit more cyclical, but within that, cryptocurrency miners purchased a lot of gaming GPUs for their cryptocurrency mining. So you can see in, for example, 2020 and 2023, well, those are NVIDIA's financial years. So they've got a 31 Jan financial year. So 2022, for example, represents calendar year 2021. But you can see that cyclicality in the gaming segment, and you can see that the revenue growth not being as consistent there. So the important point here means that as NVIDIA has kind of changed their revenue mix towards data centers, they've experienced this explosive growth of late, which hasn't been very cyclical in the last few years. This graph, I think, is quite important to try and visualize the importance of GPUs for your big internet players. So what this represents is data center wallet share. So for example, every $100 spent by the likes of a Microsoft, how much is going towards NVIDIA versus an Intel or AMD? So as I explained earlier, CPUs were traditionally used in data centers, and there wasn't much need for GPUs because of the compute intensity requirements. So, in the last few quarters, in the last 2-3 years, you've seen a big jump in NVIDIA's wallet share. So these customers, the internet service providers, for example, Microsoft and Google, have had to spend very aggressively to build out AI capacity, and this has resulted in a big shift in wallet share and has sort of explained why NVIDIA has outperformed the likes of an Intel or an AMD in terms of their growth in their data center business. And as I've said about the big US internet players, this graph shows NVIDIA's data center revenue in the dark orange, and then the capital expenditure by the large US cloud providers. So these cloud providers in this graph includes Amazon, Meta, Microsoft, and Google. So you can see this very high correlation between growth in capital spending and NVIDIA's revenue growth in the data center segment, at least. And we know within that they've got a relatively high customer concentration, and a lot of the growth has been driven by these large US internet players. So, for example, a few quarters ago, in NVIDIA's annual report, they disclosed that Microsoft was approximately 20% of their revenue. That obviously varies a bit and be a little bit cyclical, but currently the vast majority of their growth has been driven by these large US internet companies. This is just having a look at historical revenue and revenue growth in the labels on the left, and operating profits and operating profit margins on the right. And I think the important takeaway here is that if you consider Bloomberg consensus numbers, so those are the light orange bars, it shows that consensus is not expecting much of a digestion in demand. So why this is quite important is if we go back historically and look at an Intel or an AMD, who are obviously very important with the CPU market, there were historical cycles and there were periods of digestions where after these companies or the consumers, such as Microsoft, has spent a lot in CapEx, they would go through a 1 to 3 years of digestion where they wouldn't grow capital expenditure, or capital expenditure would decline somewhat before they need to refurbish their machinery and upgrade some of the technology. So consensus isn't expecting that. And then if you look at the operating profits and operating profit margins, again, what we see is consensus is expecting NVIDIA to continue with the record levels of profitability that they've been experiencing. I think if we look at Taiwan Semiconductors, before we go into any of the details, the image on the left is called a clean room. It's a phenomenal feat. So a clean room is where semiconductors are manufactured. So these clean rooms or fabs as they're known. And a fab stands for fabrication unit. These are approximately 1,000 to 10,000 times cleaner than an operating room. And the reason why this is very important is because if there's any contamination of a semiconductor wafer, in terms of, for example, a speck of dust going onto that wafer, and given the complexity of that wafer, you effectively ruin your entire batch of wafers, and it can be very costly. So these are, very, very specialized, very, very specialized equipment rooms. Then, some of TSMC's history, which is quite important as well. So they were founded by a guy called Morris Chang. He's somewhat of a legend in the industry, as the first dedicated semiconductor foundry. In 1994, TSMC went public in Taiwan. And this is very important because the Taiwanese people have immense pride in TSMC. And there's a podcast which I'll show at the end, and which I'd recommend listening to, talks to a lot of these important cultural aspects of TSMC within Taiwan. The work ethic of these TSMC workers is phenomenal. These factories operate effectively 24/7. Then in the 2000s, TSMC started to emerge as a global leader, and they won contracts from the likes of Apple, AMD, and Nvidia. And the Apple story is quite interesting. It would be worth reading up if you're interested. So Apple initially approached Intel to produce their chips for their phones and computers, and Intel refused the contract. But TSMC took on the contract, and this is quite important for them. In 2018, they were the first to produce 7-nanometer chips, really showing their dominance in the advanced manufacturing side of things. And then they just continued their growth in the 2000s, continuing to be at the forefront of technology. And they've now started expanding their capacity outside of Taiwan. So building new facilities in the US, Japan, there's a facility in Germany as well. This shows foundry revenue as a percentage of total semiconductor sales. So foundry, as I've said, refers to the manufacturers of semiconductors that purely manufacture semiconductors. So what we've seen is a change in industry structure where traditionally semiconductor companies used to produce their own chips. So if we think of an Intel, for example, used to produce almost all of their chips themselves. They've now started outsourcing a portion of that to TSMC. But beyond that, many other companies have decided to follow an asset-light model. And this makes sense because of the complexity of designing these chips, the immense capital costs, and the flexibility which it gives companies to start ordering when there's demand and taper down orders when there's less demand. This is Taiwan Semiconductor's market share in the total foundry market on the left, and you can see there's been impressive growth there. But I think more importantly than that, if you look at the graph on the right, this shows the number of players that are capable at different semiconductor nodes. So the smaller the number, the more advanced the technology. So 2-nanometer refers to the most advanced technology. So a nanometer is a unit of measurement to describe the small features on a semiconductor. So in particular, it refers to the distance between individual transistors or individual switches, as I've explained. So 1 nanometer is a billionth of a meter. And to put this into perspective, a human hair is 100 or 10,000 nanometers. So, these chips are incredibly complex and impressive. What we've seen is, even though there are certain players which are competent at more advanced nodes, for example, Samsung and Intel, they've really struggled to scale up production and produce these chips profitably. So they really are struggling at the moment. They're trying to get this right, but TSMC have been well ahead of the curve. They've got more than 80% share in semiconductors from 5 nanometer and below. What we've seen with TSMC's revenue growth has been quite impressive. So the bars are annual revenue growth. The black line is the historical annual revenue growth from 2013 to 2024, and it's compounded at 12%. But what TSMC have recently done at their last result call is they've upgraded their medium-term revenue growth guidance from 15 to 20% to 20%, which is represented by the orange line. So what this shows is, they're very confident in the outlook for the industry, or very confident also in the outlook for the business and the ability for the business to continue growing its market share. And it's quite important, and it talks to the accelerated demand for semiconductors. Quite importantly as well, which I think is often not talked about, is TSMC's free cash flow generation. So as I've mentioned, these companies are very capital intensive, or the companies in this foundry industry. But what they've started to do more recently is convert some of the equipment which was used for more legacy nodes to more advanced nodes. And this has helped them to bring down capital intensity somewhat. Their guidance is also for reduced capital intensity going forward. And this has obviously helped them improve free cash flow and free cash flow conversion. Historically, I think it's important to note that this wasn't possible with more legacy technology. So when you'd moved from, for example, a 65 nanometer node to a 45 nanometer node, there were large differences in the types of equipment used, so it wasn't possible to completely convert that capacity. With ASML, I think before going into any detail again, I think it's quite helpful to kind of visualize and understand the complexity of this machinery and why it's so important. So ASML produces what's called a lithography machine, or the way to think about it is it's really a sophisticated laser system which prints electrical circuitry onto a chip. So the image on the left is an extreme ultraviolet lithography machine, which I'll describe in the next slide, but it's their latest and most impressive technology. And this equipment, for example, is the size of a double-decker bus. It takes 7 planes to transport, and it takes months to assemble at the customer's factory, because there's a lot of testing that has to go on, and very, very complex machinery to produce and to use. Why I've got an image of a moon on the left is to also try and visualize why this EUV technology is so impressive. So you can imagine shining a laser from wherever you are to the moon and hitting a golf ball with complete accuracy and stability. And that's essentially what EUV technology is able to do. So they're effectively able to print images on a chip, which are only a few atoms wide. Before I go into the history of ASML, I just want to start with the graph on the flow chart on the right, and trying to put into context where ASML fits in terms of the equipment industry. So, as I mentioned earlier, each of the equipment players are relatively niche in terms of their offering and what part of the value chain they supply. So, if you think of the 3 basic steps of manufacturing a semiconductor, you effectively firstly put the material down and coat the semiconductor with various chemicals. Then you pattern the semiconductor, and I've highlighted that with the orange text box, or the orange box. And this is what ASML does. They expose the wafer, which is effectively shining a laser onto the wafer to print the imagery. And then, the last step is to effectively take away some excess material, so carve out excess material, and then you repeat these steps various times to get the different layers correct as you need them. What happens, and what's quite important, is the image at the bottom right is what's called a photo mask, and this is effectively a stencil. So these lasers are shone through a stencil to produce the imagery that's required on the semiconductor. And there's, like I said, these processes are repeated multiple times to get the semiconductor to where it needs to be. Then if we consider some of ASML's history, which is obviously very important as well. So they were founded by Philips, by Philips many years ago. And then in the 2000s, they became a very dominant supplier of lithography machines. And then the market started to realize, or the producers started to realize that we were reaching a point of physical limitations in terms of the size of the chips, and we needed new technology to produce more advanced chips. So ASML partnered with a number of customers. So they actually took in investments from the likes of Intel and TSMC and Samsung. And in exchange, those customers provided funding, billions of dollars of funding, and received equity stakes, small equity stakes in the business to help them develop this technology, which was very critical and was critical for the advancement of semiconductors and to where we've come today. So then in the 2010s, they invented the EUV machine. So as I've explained before, the EUV technology or extreme ultraviolet lithography machines have been very important to your most leading edge chips. And then in the 2020s, they continued to roll this out, and this equipment is necessary to produce chips at a 5 nanometer, 3 nanometer, and 2 nanometer level. And they've continued to innovate here. So most recently, at the end of 2023, they launched something called the high NA EUV machine, which is just effectively a more advanced version of the incumbent EUV machine, which allows you to produce chips at a 2 nanometer level. And then they've got a nice roadmap of new versions of the EUV machines, which will allow us to ultimately to proceed to semiconductor nodes at a 1 nanometer level, which is still a number of years out. I think another thing that makes ASML quite unique and important is that they've got a very strong sort of strength in the market, in the sense that they've got very little competition from domestic Chinese players in lithography. So the image on the left shows China's self-sufficiency in lithography. So I've highlighted that with the orange text box. So self-sufficiency effectively measures the amount of Chinese demand, which can be satisfied by local players. And they've really only got one big player in China, or relatively small in global context, but one player in China, which is trying to produce lithography machines. They haven't come anywhere close to producing EUV machines, neither have any other global peers. But it talks to the fact that there's less risk of competition from Chinese players in this side of the market. But one thing we have seen of late, and you probably would have read about, is there's been a lot of demand and sales into China more recently. So the graph on the right just shows ASML's equipment revenue by geography. So what we can see is in the last 6 quarters, there's been a big pickup in sales from China, as they obviously try to build new capacity, and they're subsidized by government as well. So there's been, some strong demand there, but importantly, we start to see demand picking up from other regions, with the gray bar starting to inflect higher. Then I think it's important to also remember and realize that ASML is not just a play on EUV technology. They've also got a more legacy technology called deep ultraviolet lithography, which is generally used for more legacy chips up until 7 nanometer chips. And what's important here is that's represented by the light gray bar, and that's still growing. And in addition to that, ASML are continuing to innovate here. So they're producing newer DUV machines, which are more efficient for customers and save customers on costs and help them to improve production capacity and throughput. So it's not just a case of EUV. There's a very solid business behind ASML. I've tried to highlight a few of my favorite podcasts which touch on each of these companies here. Unfortunately, there's no time to go into a lot of depth in the session on each of these companies, but I think listening to some of these podcasts gives you a very nice flavor of the depth within these companies, of their history as well. So feel free to jot some of these down. Thank you.
Amazing.
Well,
Thanks, Ash. That was brilliant. Maybe we can just spend the next 5 minutes with some questions. And yeah, if we don't get to your question, please feel free just to email that to us and we'll address that for you. So let's kick off. DeepSeek's entry into AI, along with their buzz around the training methods and OpenAI's accusations, is obviously making waves in the industry at the moment. Maybe you could just spend some time unpacking how this impacts the industry moving forward.
sure, thanks, Karina. I think the first thing to note, and it's quite important, is this number of $5 million for training has been talked about a lot in the media. But firstly, that $5 million number is only for the final training run. So we don't know what the complete cost of developing this model was. There's obviously a lot of costs that go into R&D, pre-training. So that's the first thing to note. And then there's also some uncertainty about exactly what was used to train these models. So what GPUs really went into training these models, how many of these GPUs went into training the models, and whether a lot of the GPUs used to train these models are now subject to export controls from the US. So that's also quite important to note. And then what DeepSeek did to train these models, very impressive, but at the same time, they used some very sophisticated and clever techniques, which some of them, one's called the method of expertise, another one's called diffusion. And think diffusion is quite a nice way to think about it. The way diffusion works is effectively you use other models, existing models, to train your model. So therefore, you're saving a lot on the training costs. And we also know that OpenAI recently accused DeepSeek of using their model to train the DeepSeek model. So there are a lot of different methods that have gone into this, but these methods are not unique to the industry. Researchers have talked about it for years. I think it's very unlikely that the likes of OpenAI and Google, for example, aren't using the same methods in training some of their newer models. And then, I think also importantly, we've seen very strong CapEx guidance numbers from your big US internet players, the likes of Google, Microsoft, Meta, etc., which talks to their confidence in demand for AI. They wouldn't be spending so much if they didn't have some sort of visibility or confidence in being able to, roll this out and hopefully monetize it quite soon. And then I think there's always, different ways and clever ways to produce more better models. So this industry is going to continue to evolve. So I don't think, it's necessarily a massive risk for the rest of the players who can do the same thing. We also saw that DeepSeek recently said they're going to hike prices on their model as well, for usage of their model as well. So it's an evolving topic which we're watching quite closely, but for now we're not too concerned that it's going to drastically negatively impact some of the incumbents.
Great, thanks, Ash. And then I've got a couple of questions coming through on this topic, so I'm just going to combine them. So basically, TSMC holds a dominant market share in their industry, with the competitors like Intel and Samsung falling further behind. And ASML has no real competitor in its segment. So if we shift focus to NVIDIA, how secure is its positioning given AMD's presence, and how do you see that rivalry evolving? And then just to add onto that, the question that we've gotten is, why is Samsung struggling versus TSMC if they both use ASML's equipment?
Okay. Let me start with the question on NVIDIA and the competitive positioning. So, as I mentioned, NVIDIA have been the incumbent. They've had more than 2 decades of experience producing these GPUs, tremendous IP. They've got the CUDA software base, which is very important for them. Then we've got some emerging competition. So, the most topical of that would be AMD, who've launched something called the Milan 300 GPU. So they launched that at the beginning of 2024, and they've produced $5 billion of revenue from this particular product in the last year. So it's grown quite nicely in the first year of launch, which is impressive. But what they've done is at the last earnings call, they provided some guidance going forward on how they see the trajectory in the next quarter, next 2 quarters from the data center business, and it really doesn't look very impressive relative to what we've seen from NVIDIA. And part of the reason behind this, I think, is AMD is struggling on the software level. So as I've said before, CUDA software can't be used with AMD chips. So some of the customers are struggling to get the software layer right. So there definitely is emerging competition, but I think it'll take some time. I think NVIDIA's position is very strong. They've got superior technology, they've got superior software. But these capital costs for companies buying GPUs are tremendously high. So the element of risk is also high. So you generally would want to have very high confidence that the chips you're buying are able to work efficiently as you want them to. And then your question on Samsung. So Samsung, I think it's quite important to put that business into context. So the majority of the business, I think approximately 50% of operating profits for Samsung on a normalized basis comes from their memory business. That is memory chips which they produce and sell to other customers. Their foundry business is very small in their mix. It's circa 10% of their revenues, and they're trying to sort of scale that business. They've introduced different technology, some clever technology, something called gate-all-around technology, which is a different way of structuring your transistors on a chip. Which is they were the first to try and do this. They struggled to get this right the first time. TSMC have been a lot more cautious, only trying to roll out this method of application in the next year or two. There've also been some leadership hiccups at Samsung in the sense that they've replaced the head of their foundry business, and they just generally are struggling with the complexity of the technology for now. They've still got access to the machinery, but I think very importantly, it's one thing having the machinery, but it's another thing having that massive expertise and IP and being able to do this efficiently at scale at a low enough cost.
Great, thanks, Ash. And maybe if we can just squeeze in one last question, and we'll get back to the rest of the questions via email. Maybe we can just discuss how significant the risk of a Taiwan invasion is to the global semis industry, and what could those consequences look like for TSMC?
Sure. So I think there's a few things to note. I think firstly, TSMC have previously said that they can shut down most of their factories remotely if need be. But in addition to that, there's a big software layer that goes into the equipment. So an ASML machine, for example, would be connected to the internet at all times, and there's a lot of software support that goes into these machines as well. So that could be shut off very, very quickly. But more importantly than that, you need support. So you need technical support and software support to continue running these machines. So very quickly the taps will be shut off. The rest of the supply chain will shut off supply of raw materials. So, it's not as simple as taking over these factories and starting to run them very efficiently, very quickly. There's a lot of complexity that goes into it. So I think from that perspective, it would be difficult for the Chinese to run these factories efficiently. But then also, as I've mentioned, TSMC are aggressively starting to roll out new facilities in different regions, which will help them to de-risk that part of the business.
Great, thank you. So yeah, I think that we'll wrap up the session there. A big thanks to you, Ash, for a very insightful presentation, and thank you for all the engagement and questions from the participants. If you guys do have any further questions or you'd like to continue the conversation, please feel free to reach out to us. And yeah, thank you again for joining. We'll look forward to seeing you at our next session, which will be on the 6th of March. That's where we'll discuss what is cloud, and how companies like Microsoft and Amazon play in the industry.
Thank you, Karena. Thanks to all the attendees.
Thanks so much.